Be Wealthy and Smart, episode 617.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about where to invest in times of turmoil, because now is one of those times. On September 14th, Saudi Arabia's Aramco was hit by drones. We don't know all the details right now, but it did send the oil markets into a tizzy. And by that, I mean it sent oil prices spiking, the most that they have in decades. And the following Monday, the stock market opened lower, but there was an investment that actually was higher. If you remember that Monday morning, that the stock market opened after the Saudi Arabia attack, there was also news that there was a possible employee strike at General Motors. And we saw gold, the metal, the spot price of gold that is, was up 1.21% that morning. And silver was up 2.89% for the spot price of silver, as well as the large miners, GDXJ ETF was up 2.89% as well, and the junior miners, GDXJ ETF, was up 3.42%, almost triple the spot price of gold. So any one of those investments, gold, silver, or the large or junior miners, performed positively in that time of turmoil. Now, it's not just something that might be a threat of war or a threat of a strike by employees, but it also can benefit from natural disasters, from economic turmoil, large drops in the stock market, for example, drops in interest rates, any kind of excessive liquidity provided by the Fed, such as quantitative easing, where they are essentially printing more money, government turmoil. There are all kinds of forms of turmoil. But the precious metals in general have been a good place to be invested for times of turmoil. And I've talked about that before on the podcast, where it's such a nice thing to have in your portfolio, because with that diversification, when the market can drop, it often can go in the other direction. And what a nice cushion to have in your portfolio, just to even things out and lessen some of that volatility in your portfolio. But this isn't just a one-day thing. The metals have actually been on a tear for a while, and when we look at the one-year performance, it's literally astounding. On a year-to-date basis, the S&P 500 is up 20.22%, which is excellent for not even having finished the year yet. For the first 9 months of the year, having a 20% return is phenomenal. Let's hope the S&P can hang on to a lot of that through the end of this year. But on a one-year basis, the S&P is up only 3.28%. When we look at the spot price of gold, it's up 21.97% over the last year. Silver's up 25.72% versus 3.28% for the S&P 500. So what a spectacular difference, and what a nice cushion to have in your portfolio to even out some of that volatility. Because as you remember, we had that deep dip last December where the S&P was down about 20%. So that's why there's a big difference in the S&P's current performance of 20% versus one-year performance of 3.28%. We have that volatility that was in there in the year-ago period. But when you look at the miners, it's even more dramatic. The small miners on a one-year basis are up 39.73% versus 3.28% for the S&P. And hold on to your chair, they're up 52.68% for the last 1 year versus 3.28% for the S&P 500. Now, we don't want to judge everything just on a one-year basis, We always like to look out 3 to 5 years, but I have said for a long time the metals are significantly undervalued, and I still believe that to be true. But since we're talking about investing in times of turmoil, I want to share an article with you that also backs up my point that it wasn't just this past week's turmoil that showed that precious metals or miners could be a spectacular way to diversify, but it's also been true over some very significant points of turmoil in history. So this article comes to us from mining.com, and it was written by Frick Els. And it says, the 8 times since Black Monday, stock investors wish they'd held gold. And it says, climbing higher on the back of safe haven buying, the price of gold camped out above $1,500 an ounce on Monday after the strike on Saudi oil infrastructure added further worries to already unnerved markets. A recent study by the World Gold Council shows during times of stress on financial markets, gold usually outperforms equities stocks. In fact, the metal has done so during 8 of the last 9 shocks to financial markets, starting with 1987's Black Monday on Wall Street through to last December's rout on U.S. markets. If you recall, 1987, October 19th, 1987, was called Black Monday because the stock market dropped 28% in one day because of program trading gone crazy and sell programs gone wild. The article goes on to say, the World Gold Council points out in a report looking at gold as a commodity investment that the metal tends to find favor during good times, but is also negatively correlated with other assets during so-called risk-off periods. So what that means is that negative correlation means when one thing goes up, a negatively correlated asset would not move in conjunction with that. In fact, it could move opposite to that. This dynamism reflects gold's dual nature as both a consumer good and an investment. When economic conditions are benign, expenditure tends to increase on items such as jewelry or technological devices, and this works in gold's favor. During times of systemic risk, however, market participants seek high-quality, liquid assets that preserve capital and minimize losses. This can also benefit gold by boosting investment demand and driving up prices. Last year, stock markets suffered their worst performance since the Great Recession a decade ago, and almost all the selling happening in the final months of the year. During the fourth quarter of 2018, the S&P 500 index of the largest U.S. companies fell 14%. Commodities fell 9%, but the price of gold rose 8%. And then it has a nice chart that shows different volatilities happening and how gold has been a stellar performer during each of these times. Black Monday, long-term capital management crisis when the banks almost went out of business, the dot-com bubble, 9/11, the 2002 recession, the Great Recession of 2007 and 8, the sovereign debt crisis 1, the sovereign debt crisis number 2, and the 2018 pullback last year. So I will attach a copy of this article to the show notes so you can see this chart and you can see the spectacular performance of gold during each one of those very volatile and risky times. So if you're looking for something to steady your portfolio, something that can go up in times of turmoil, whatever that turmoil might be, I suggest that you consider adding some physical gold or silver to your portfolio and maybe even some of the mining ETFs. But don't take my word for it. Do your own research. These things are very volatile and can move a lot, and anything that's gone up 50% in the last year is due for a pullback. So be very, very cautious. I recommend you learn how to read charts so you can learn when to get in on a pullback and when that pullback is about finished or when a pullback is about to happen. But nonetheless, these mining ETFs are up quite a bit. So I would say have some caution here. I wouldn't advise just jumping in, but this is something for your knowledge, something for you to put in your back pocket that you can, at the right time, perhaps add to a portfolio to diversify have something that might go up when the market goes down, and otherwise protect your assets. This is something that we do in the VIP experience. If you are interested in knowing more about this, interested in learning how to read charts and understanding timing of when to get into markets and when not to get into markets, understanding more about the stock market and investing, and perhaps improving your investing performance, fill out the short questionnaire and we'll set up a mutually convenient time for us to talk and see if it's a good fit for both of us. If you haven't already subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be updated as soon as new podcasts are available. And don't forget, all of my podcasts are available on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.